Assalamualaikum and good day everyone. We are from Group 4. We present about special types of Islamic and conventional documentary credit. My name is Nor Fatehah binti Abdul Rahim and my metric number is 272601. To start our presentation, I will be presenting about assignment of proceeds. So, what is an assignment of proceeds? An assignment of proceeds is a financial document that is used to redirect all or a portion of a currently active letter of credit from the current beneficiary to a third-party beneficiary. Assigning the proceeds from a letter of credit can be utilized in many types of scenarios, such as to pay suppliers or vendors in a business transaction or to settle other debts. Next, I will explain how an assignment of proceeds works. A letter of credit is a promise from a bank that a buyer will pay a seller on time and in full. If the buyer is unable to make a payment, the bank must reimburse the entire purchase price. The original beneficiary of a letter of credit may choose to have the proceeds delivered to a third person instead through an assignment of proceeds. To process an assignment of proceeds, the original beneficiary must file a request to the bank or other financial institution issuing the letter of credit. The financial institution must authorize the assignment of proceeds once it is submitted, pending the letter of credit's criteria. No assignment will occur if the original beneficiary does not meet his responsibility. After approval, the bank or other entity release the funds to the third party for use at pleasure. To understand this, let's take a look at this flow chart. Firstly, the importer issued a contract or purchase order to the exporter. Then, both parties agree with the LC terms. The next step is the importer will make an application to the opening bank to open LC. Then, the opening bank will issue the LC to the confirming bank. The confirming bank will advise LC to the seller, and the seller will then assign an agreed proportion of LC proceeds to the third party. The third party in this case is the assignee. So the assignee will procure and buy the goods needed on behalf of the seller and ship them to the customer. In cooperation with seller, all LC documents are presented to the confirming bank. Next, the bank accepts the documents and makes direct payment to the beneficiary and assignee in accordance with assignments of proceeds agreement.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nor binti Bahtiar and my metric number is 272473. Now I will explain the SBLC or a standby letter of credit. A standby letter of credit is a guarantee that is made by a bank on behalf of a client, which ensure payment will be made even if the client cannot fulfill the payment. It is a payment of last resort from the bank and ideally is never meant to be used. An LCBC is also used as a safety mechanism for the beneficiary and in attempt to hedge out risks associated with the trade. The standby basically fulfills the same purpose as a bank guarantee. Simplistically, it's a guarantee of payment which will be used by a bank on behalf of the client. In short, SBLC are used to guarantee any failure to pay at the part of the purchaser or importer and guarantee any failure to perform the agreement on the part of the supplier or exporter. Next, type of SBLC. There are mainly two types of standby letter of credit. First, financial standby letter credit. Financial standby letter of credit is an irrevocable undertaking by the bank to make payment to the beneficiary if the purchaser failed to meet the obligation. The bank pay the guarantee amount in full as a financial standby letter of credit have 100% conversion factor. For example, if a crude oil company ship oil to a foreign buyer with an expectation that the buyer will pay within 30 days from the date of the shipment and the payment is not made by the required date, the crude oil seller can collect the payment for goods delivery from the buyer's bank since it's a credit. The bank will collect the principal plus interest from the buyer. Second, performance standby letter credit. Performance standby letter of credit is based on the fulfillment of the performance and the bank makes 50% payment from beneficiary if the purchaser failed to make the payment. Performance SBLC are used in projects that are scheduled for the completion within a specified timeline, such as construction project. The payment serves as a penalty for delays in the project completion, and it is used as a compensate the customer for inconvenience caused or to pay another contractor to take over the project. Next, how a standby letter credit works. The process of obtaining an SBLC is similar to a loan application process. The process starts when the buyer applies for an SBLC at a commercial bank. The bank will perform its due diligence on the buyer to assess its creditworthiness based on the past credit history and the most recent credit report. If the buyer's creditworthiness is in question, the bank may require the buyer to provide an asset or the fund on deposit as a collateral before approval. The level of collateral will depend on the risk involved, the strength of the business, and the amount secured by the SBLC. The buyer will also require to furnish the bank with information about the seller, shipping document required for the payment, the beneficiary's bank, and the period when the SBLC is valid. After the review of the documentation, the commercial bank will provide an SBLC to the buyer. The bank will charge a service fee from 1% to 10% for each year when the financial instrument remains valid. If the buyer meets its obligation in the contract before the due date, the bank will terminate the SBLC without a further charge to the buyer. SBLC is not actually meant to be used and only act as a security against default. It comes into action when the buyer fails to meet the term of the contract to the various reasons such as bankruptcy, cash flow crunch, dishonesty, and many more. If it happens, the seller is required to present all the required documentation listed in the SBLC to the buyer's bank within a specified period. Once the bank verified the proof, they release the payment to the seller. The buyer then makes the payment to the bank at a later date along with the interest. Next, advantages of standby letter of credit. First, it secures the seller against the default of the buyer for non-payment. Second, the buyer will also feel safe as the seller must adhere to standby letter of credit's requirements such as performance clause to get paid. 3. It demonstrates the buyer's creditworthiness and capacity to pay in the case of default. 4. It aids in the development of the trust between the buyers and seller as well as the reduction of the risk. Thank you. That's all from me.
Assalamualaikum, my name is binti Rosslan. My matching number is 272451. I will continue with the transferable letter of credit. Okay, transferable letter of credit is a credit facility in which the first beneficiary has the right to pass on the available credit to another party, such as to secondary beneficiary. This is possible only when the letter of credit is marked as transferable by the issuing bank upon the instruction of the buyer or the importer of goods. Okay, a transferable letter of credit is often used in business deal to ensure payment to the supplier or manufacturer. Is an alternative option to advance payment. Also, transferable letter of credit can be issued subject to UCP 600. It can be transferred more than one beneficiary, but transferred credit cannot be transferred to another second beneficiary once more. Okay, next I will continue with how transferable of letter of credit is work. Okay, transfer letter of credit involve a middleman. The middleman has identified a buyer of a product and also identified a source of. Okay, for the first step, is the middleman sign a contract with a buyer and sign a contract with a supplier. Okay, the contract states that payment will be made by means of transferable commercial letter of credit. Okay, next second step is the end buyer applies for a transferable letter of credit with the issuing bank. His bank review the request and if satisfied, the issuing bank will issue the letter of credit to the middleman. Okay, third step is the middleman request that a transfer letter of credit be issued to the supplier. The transfer letter of credit will call for all of the same document as the master letter of credit but may be for a lesser amount. One letter of credit transfer, the supplier produce the good and ship them to the end buyer. After that, the supplier collect and present the document called for in the transfer letter of credit to the transferring bank. Okay, next the middleman is notified that document have been presented by the supplier and is given an opportunity to substitute his invoice. After that, the transferring bank submit the assembled document to the issuing bank for examination role and payment. The transferring bank play an administrative role and has no undertaking pay until payment is received from the issuer. After that, the issuing bank charge the end buyer for letter of credit applicant and deliver the document to them. And lastly, the end buyer use the document to pick up the goods, but the identity of the actual supplier as the supplier name is probably not in the document that the end buyer received. Okay, next is what can be changed when transferring letter of credit. The amount of letter of credit and unit price may be reduced. The expiry date, latest shipping dates, and the time period after the date of shipment for presenting document to the bank may be curtailed. The name of the beneficiary is substituted for the name of the applicant or buyer. But if the applicant name is required to be stated in any document other than the invoice, this requirement must be added too. And lastly, if an insurance document is required, the coverage may increase to provide coverage as required by the original letter of credit. That's all from me. Thank you.
So we move to the back-to-back letter of credit. So what is exactly back-to-back letter of credit? So generally the broker or the trader act as an intermediaries between the seller and also the buyer. Instead of issuing a letter of credit to the supplier, the buyer issues it to the intermediary, which is the trader or the broker. So the broker and then submits the primary letter of credit as a collateral at a bank, and then they ask it to issue another letter of credit to be given to the end supplier in exchange for the shipment. So the second letter of credit that is issued keeping the primary letter of credit as collateral, this is known as the back-to-back letter of credit. So now here is a flow on how a back-to-back letter of credit works. So the first half of a back-to-back letter of credit process is similar to a commercial letter of credit. So it's basically the buyer goes to his bank, or as known as the issuing bank, and then the buyer seek and letter of credit, and then the issuing bank send it to the broker's bank. So this letter of credit is known as the principal or the master of letter of credit. And then for the next step, the broker asks his bank to issue another letter of credit to the supplier, and then they keep the first letter of credit as a collateral. So this letter of credit is known as the back-to-back letter of credit. And then we move to the next step. The supplier transport the shipment or the cargo to the buyer, and also they submit the document of transport like the bill of loading, etc. to their bank. So the supplier banks then send the document to the broker's bank, which upon carefully scrutinizing the document and then makes the payment to the supplier bank. The next step, the supplier banks pays the supplier for the goods, and then the broker's bank and then sends the document to the buyer's bank, which is the issuing bank, and then the bank scrutinize the documents and pays the broker's bank, which is the broker's bank, the amount listed in the letter of credit, in the first letter of credit. And then lastly, the buyer pays to their bank, which is issuing banks, the money upon the delivery of the goods from the supplier. Finally, we move to the terms and also the conditions under back-to-back letter of credit. So what is the term and also the condition under back-to-back letter of credit? Firstly, issued on request of beneficiary of original LC. Secondly, original letter of credit provides a backup. It's mean the creditworthiness or of the beneficiary of the original letter of credit are also relevant for the backup. Next, the term and condition such as the quality, quantity, and other specification of the goods or the services of back-to-back letter of credit and also original letter of credit must be similar. And then next is the price and also the amount of back-to-back letter of credit shall be lower than the amount of the original letter of credit. And next, shipment date may be earlier than the original letter of credit in order to provide the cushion. And then the expire date of back-to-back letter of credit shall be earlier than the original letter of credit. And lastly, on the issue of back-to-back letter of credit, amendment in original letter of credit only which is the relevant to the both condition of letter of credit.
Assalamualaikum, my name is Mohamad Hafiz bin Ghazali, metric number 273340. I will talk about red and green clause letter of credit. Red clause letter of credit. A red clause letter of credit is a specific type of letter of credit in which a buyer extends an unsecured loan to a seller. Red clause letter of credit permit documentary credit beneficiary to receive funds for any merchandise outlined in the letter of credit. Okay, then how a red clause letter of credit works? The funds provided in a red clause letter of credit are known as advance. These advances are deducted from the face amount of the credit when it is presented for payment. Red clause letters are usually employed to facilitate international export and trade. This letter of credit was originally written in red ink. A red clause letter of credit allows for an exporter to obtain pre-shipping finance, although available credit is usually on part of the estimate value. It could even be the entire sale value. A buyer can expand their supply source with a red clause letter of credit. Most buyers shy away from becoming involved in financing goods that have not yet been shipped, but exporter and buyer may be linked together through a normal contract with the trade bank establishing the red clause letter of credit against a registered contract with an approved buyer. Next is green clause letter of credit, also known as anticipatory credit, a letter of credit which contains a clause authorizing the nominate bank to make advance to the seller against security, such as a payment guarantee from a third party or the pre-shipping storage of the good in the name of the nominated bank or the issuing bank before shipping or presentation of documents. If the seller fails to present the documents, the issue bank or buyer reimbursement obligation can be recovered through enforcement of the security. Next, green clause letter of credit is an extension of red clause letter of credit, which means it provides the advance not only for the purchase of raw material, processing and packaging of goods, but also for pre-shipment, warehousing at the port of origin and insurance expense. In usual case, the advance under this letter of credit is granted only after the purchased goods are stored in bounded warehouse. This type of letter of credit is usually used in transactions related to commodity markets such as wheat, rice, gold, and many more. Thank you.